So Trump met with Canadian Prime Minister Mark Carney in the White House earlier today, and he was quoted saying, "Everyone says when are you going to sign deals?" And Trump says, "We don't have to sign deals. They have to sign deals with us. They want a piece of our market. We don't want a piece of their market." That was a quote or quotes from President Trump. He says, "I wish they'd stop asking how many deals are you signing this week, because one day we'll come and we'll give you 100 deals." End of quote. I bring that to your attention because the stock market, as we've talked about on several recent shows, the stock market is banking on two things. Number one, trade deals getting inked and put out in the media. And number two, rate cuts. We addressed the rate cut issue, I believe, on yesterday's show. No rate cuts are coming this week from the Federal Reserve. So that's one off the table. Markets are shaky at best. Now they hear today, quote from Trump, that we don't need to sign trade deals. Scott Bessent was out either today, this morning, earlier, or yesterday, saying that trade deals are on the way. So again, maybe some mixed signals from what's going on in the administration. And again, I'm not weighing in on the whether or not the tariffs are a good thing or a bad thing. Just letting you know, when the stock market sees this. They see their rate cuts out the window. They're now hearing Trump say, "Look, we don't need to sign trade deals. They have to come to us." Bring that to your attention because I saw a story from a local Los Angeles news station, Channel 4 News. I think it was yesterday. And it talks about the fact that they are saying at the Los Angeles port, there is 44% less shipping containers coming in from China from the same time last year. So from May of last year to now, there's 44% less containers coming in. Obviously, that means less jobs. Truckers are impacted by that. Port workers are impacted by that. Obviously, businesses that are going to get a lot fewer products are impacted by that because that means less revenues. However, for all of us as consumers, let's start paying attention to the prospect, okay? I'm not inciting panic here, but the prospect that there could be some shortages on shelves, at some of your local shopping places coming, they're saying in this story, as soon as within a couple of months. So even if things don't reverse and turn around, you still have an absence of 44% of the goods or shipping containers that we had being put on store shelves across the country this time last year. Okay, so let's see what happens. Is now the time to maybe top off on stuff that you may require on a daily or weekly basis for your family. Again, I'll leave that to your discretion. Love to get your thoughts and comments below, but this is what's happening. Los Angeles Port. And again, a lot of stuff comes into LA and Long Beach, and then it's put on rail, it's put on trucks, and they go east on the 10, and they go into Arizona, down to Texas, across the country as this stuff is spread out, and it's simply not there right now, okay? Stock markets, again, are continue to absorb this situation. Dow dropped 389 today. 389 points. S&P dropped 43 points. The NASDAQ dropped 154 points. Bonds, we saw a little bit of a fear trade again. People buying bonds were being purchased. The 10-year yield dropped 4 basis points. It's at 4.29%. So some money did make its way back into the bond market today. What is going on with gold? Gold closed, as I'm doing this show, the gold market just closed about 5 minutes ago. Gold closed up just shy of $100 an ounce today. finished well over $3,400 a troy ounce. Silver closed up 72 cents, sitting at $33.29. A lot of catching up for silver to do, but gold appears right now to be unstoppable. And again, this is not, from my perspective, mom and pop going into their local coin shop and buying a gold eagle or buying some silver eagles or some rounds. This is massive buying. I guess at institutional levels, maybe at central bank, foreign central bank levels. Again, I don't know. Love to get your thoughts on this, but to have $100 gold up days, I think yesterday was an $80 up day, something like that. So massive buying in gold. Keep an eye on it. Hopefully you guys have, over the years, certainly I've been out here for about a year and a half now talking about it, considering gold as part of a portfolio, having physical precious metals, gold, silver. Anyway, we see what it's doing now. So this is a very, very interesting story that I saw. Well, it's a warning, okay? As opposed to the word interesting, that's a wrong characterization. Out of CNBC today, Paul Tudor Jones comes out and says, look at the stock market will hit new lows even if Trump walks back some of the tariffs on China. And Paul Tudor Jones is a big figurehead in the financial space, and he's out today on CNBC, and he says he's a billionaire hedge fund manager, and he says stocks are bound to hit new lows, even if President Trump tones down his aggressive tariffs on China. For me, he says, it's pretty clear. You have Trump, who locked in on tariffs. You have the Fed, who's locked in on not cutting rates. That's not good for the stock market, Jones said on CNBC Squawk Box. We'll probably go down to new lows even when Trump dials back China to 50%. Says the widely followed investors' bearish comments came after Trump's rollout of the levies on the imports, highest levels of levies on imports in generations. Tudor goes on to say he'll dial it back to 50% or 40%, whatever. Even when he does that, it'll be the largest tax increases since the 60s, Jones said. So you can kind of take 2% or 3% off growth. He's talking about GDP growth. He says he believes stocks haven't found a bottom as macroeconomic conditions continue to deteriorate. And he talks about the Fed has held steady with its perspective that it's unlikely to lower rates anytime soon. Unless we got really dovish and really cut, you're probably going to go to new lows, according to Jones. And then when we're at new lows, the hard day will start to follow, and it'll probably create the Fed to move, create Trump to move, and then we'll get some kind of reality. So what he's basically saying is it's going to have to get to a tipping point in the markets for the Fed to actually step up and cut rates, and for Trump to actually do something. Again, I'm just sharing with you what this guy says, and markets are reacting to what's happening. All right. So I know the theme has been consistent lately, talking about the Fed, about the stock market, but it's the biggest news out there right now. And yes, it's all stemming from this tariff situation, because the Fed is saying, hey, we're on hold until we find out how much inflation is going to result from the tariffs. And then, of course, you've got the administration coming out and saying that, at least today, that we don't need to be worrying about signing trade deals, that our trading partners have to come to us. So I will leave it there today. For those of you that are in the stock market, certainly those of you that have your retirement accounts wrapped up in, or let's say dependent upon the stock market doing well or going up, I sure hope that you are considering now, not financial advice, not legal advice, but considering somehow diversifying, or let's say trying to hedge the downside risk, because Tudor Jones didn't even say how low he thought the markets could or would fall. He just said that they will make new lows. Does that mean recent lows or lows from the great financial crisis? Again, that wasn't made real clear. So again, thank you guys for tuning in, watching the show. Please hit the like button for me so we continue to spread the word, wake up the algorithms. If you're not subscribed to my channel, I appreciate and humbly ask that you hit the subscribe button. Again, I will continue coming out here, and as things unfold throughout the week. Tomorrow's Wednesday. I believe the Fed meeting does start tomorrow, but as we've discussed, nobody really is holding their breath for the Fed to make any move on rates. So with that being said, watch gold, watch that 10-year bond, and the stock market continues to feel some pain. Thanks again, everybody. I'll talk to you soon. All right, bye.